Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be doing a lot. We're going to be covering sort of the latest developments here in the market. We're going to talk a little bit of PPI. We're going to talk about stocks. We're also going to check out exactly what Jay Powell is expected to say. Jay Powell speaks today at 1 p.m. My time, 3 p.m. Eastern. So if you are in the markets, be aware that Jay Powell is going to be taking center stage, and it's going to be coming a little bit later this afternoon. So, Manish, good to see you out there in YouTube land. Bobby Bob, good to see you. Really a lot going on here in the markets. This isn't the best trading week I've ever seen. I mean, when I say there's a lot going on, it means that we're seeing a lot of whipsaw action. We're seeing correlations break down. By far the biggest story here is the U.S. dollar on the relative strength of the U.S. dollar. Commodities, once again, gold sort of taking it on the chin during the overnight. I thought we were going to get a shot at our level. We're going to recap that level because I think we could get it any time. We're going to dig into PPI and really talk about exactly what we can expect perhaps out of the next round of Fed meetings, and then also just get into some of the news of the day. I think there's a lot there to trade, and you definitely want to make sure that you don't miss out. Dibble, good to see you. Bobby Bob, good to see you. All right, guys. Here we go. Right here, if you want to get started trading, be sure to tune into switchmarkets.com. They've got 100% credit bonus right now. So if you show up with a little bit of money, they'll give you a little bit more to trade with. And I think that's anytime you can boost your buying power, your purchasing power, you need to do it. So for me, if you're in a locale where Switch Markets services, then be sure to check them out. If not, there's a lot of brokers out there. We suggest Awanda here if you're in the United States. But if you are in the Switch district, check out Switch. All right, T. Marina, good to see you, T. All right, guys, let's start with a trade follow-up. There's been a few of these lately that I really wanted to go over because there's a couple of them that worked out relatively well. And when we start talking about Mark Corp, good to see you. When we start talking about a banger, a trade that's an absolute banger, this was it. I mean, 38% level. We had sort of a retracement level here for U.S. oil, and this is exactly what we got. We got the big retracement here today. We got a little bit of a run up there to about 69.35. Not too bad. We were looking to get in about 69.14 to the sell. And what happened? We got a nice big payoff here. So just right back to the trade idea. You'll see right here, if you're curious about, I get this question every day, Shane, do you have signals? Do we have signals here? We don't have signals, but what we have is actionable trade ideas. And if you take a look at these trade ideas, they're posted in the analytics thread. And also if you follow the coaching staff here, the coaches team, these will get emailed right to your inbox every single day. Key level right there was right up around 69.14. I wanted to make sure I got into this trade. And our next level was going to be down there at 59.60. What was it? 68.59. So we nailed it. We nailed this one for about 55 pips. This was a pretty good trade. One that I was relatively confident in. I saw this come across the board earlier today. Now, it was a little bit tricky in that we did have a news event. We did have the EIA inventories report come out today, 1 day removed because of Veterans Day. That was on Wednesday, but really saw sort of our election right back there earlier today. And then we sort of traded a little bit higher. We got on a nice little pullback right away, down to about 68.92. We just didn't quite get the big follow through. So then we just sort of started mucking around, traded a little bit higher, and then the sweep lower came in. And then when we went hard. And then right there you can see where your news bar was. That's when the EIA news dropped right around 11 a.m. Eastern. Bam, you rotated back up. Theoretically, you could have taken profits before the news and then sold again after the news and done very well. But this is what I want to point out here. When you're talking about horizontal support and resistance levels, and this is why I prefer them to the crossover stuff, to some of the other strategies that we go over. I really like my horizontal levels because they give us a great opportunity, maybe not just to trade it once, but maybe twice or three times. This was a very, very good indication that we were going a much, much lower. News bar drops, EIA comes out, bam, you get the big retracement, hits our level, you go short again, and you cleaned up very well. So right now, we're sort of just waiting for this market maybe to come back a little bit or base. But as far as I'm concerned, I'm bearish WTI crude. I think it's going to come off. This market's going to come off sooner rather than later. So we're just going to go ahead and stay tuned. But for right this minute, that was a banger of a trade and one that I want to start off recapping. There was a couple of numbers that we sort of had out. This was another number that we talked about a little bit. Well, we've been talking about Bitcoin all week. Bitcoin is the story. It really is the story of the financial world right now. And when I take a good look at this chart, I mean, it's absolutely amazing. Compression, and then you finally broke. And when we broke hard. Little 4-hour chart, 4-hour pennant. And what did we have outlined? I believe we put this out on our Twitter account. If you're not familiar with our How to Trade, go over to How to Trade on X. Follow us there, and you'll get trade ideas like this and timely analytics a little bit faster when we give it to you in a live stream or video. But this pullback right down here to your entry point and then a bounce. So this was beautiful stuff. I mean, we really were looking at 87.5 as bids. What's your low there? 87.580. I would consider that as being a pretty good retracement. And then since then, you're up about $2,000, so about 2%. Great trade, absolutely great trade. Good stuff. What was our reasoning? You had a bullish pennant. There's your bullish run. There's your rotate. Key levels 87.50. We pull back to 87.580. You got to get that one. You can't sit there and wait for 87.5 exactly. That's why we always shade our entries a little bit, and I'll go over that here just a little bit later. I'm in the live stream, but I did want to cover that Bitcoin. That was a pretty good pennant there, and then the VIX, the last thing I'm going to cover here, and then we're going to dive into some of our fundies. The VIX, volatility index. The volatility index is based on those front month S&P 500 options contracts, the premiums of those options. Now, premium is what you pay to buy the option, either buy a call or a put, the right to buy or the sell, and you also do that at a specific strike price. Strike prices are different. The calls, the puts are different, but the premium is what we have to pay to get into an options contract. When those premiums start going crazy, that essentially signals that we're headed for some volatility. Now, the VIX, what that does, that measures the front month premiums for your S&P 500 options contracts. So it's always a forward-looking thing. And when those premiums stagnate, meaning they don't move anymore, then you start to see a little bit of stability in the market. Holy cow, look at this. I mean, we're looking at, this is a long-term monthly VIX chart. We're getting down near, 5-year lows here. That's 2006. This is all pre-COVID stuff. 2017. We're getting down into some relatively low territory. I have been a big proponent that says that you're going to see really a retracement or a breakdown or a what I would call a bearish sell-off here in your U.S. equities markets, and you're not seeing it. One of the things that I would be very careful with if I was looking at shorting this market, understand that volatility index is very, very low, and what that means is sunny times. It means that prices typically are going to rise because the traders right now, as we're looking forward into what can happen to the S&P 500, they're not expecting the market to come down. They're expecting it to be very calm and just sort of work its way north. I sort of disagree. I think that we're headed for some real trouble with interest rates, and I also think that there's a massive, what we would call the everything bubble that's ready to pop, and that brings banks and all sorts of things into play. But for right this minute, what we need to know is the VIX is down and stocks are up. Even though we're off a little bit today, boy, we're still incredibly bullish here. Very, very bullish. All right, let's get right on out to a few other things we need to cover here. Tuesday, Wednesday, Thursday. Today's pedal to the metal, no question about it. You're trading hard. You're trading your plan. You're trading it aggressively. Our idea is to make money today. Tuesday, Wednesday, Thursday. That's when I want to go pedal to the metal. I want to make sure I trade my plan. And if I'm trying to hit any sort of goal, you definitely want to do it Tuesday, Wednesday, Thursday. Mondays and Fridays can be very tricky, at least from my experience. Now, a lot of people don't care what day of the week it is. They just go trade, and that's great. But I want everybody in here dialed in psychologically. We get the momentum going on a Monday. Tuesday, Wednesday, Thursday, we go hard. And then Friday, we sit around and count our money. And if you do those things, you can preserve momentum in the markets and have a good opportunity to make a career out of this, which is pretty much what everybody wants to do. All right, let's see what else do we have here today. The weekly chart here. Let's see. We got a question here. Bobby Bob. Shane, how do I trade Bitcoin USD right now? I don't know. I mean, it's gone, Bobby. We were on 87.5 bids. That level's gone. The WTI trade, for me, there's no reason to make another trade today. That was a good one. That was a banger. If you want to trade WTI right now, you want to be short. And I'll look at those two again if you want, just on the short time frames. But yeah, I mean, for what I do, those trades are gone and the money's already put away. But I'll look at the price action again. I have no problem doing that. All right, so right here, week 46, you've got U.S. CPI yesterday, U.S. PPI today was the player, and also J. Powell and the EIA inventories report. PPI is one of those things that is sort of viewed as being a secondary inflationary metric. I view it as being very important because it's the inflation from the producer's point of view, and essentially what that means is They're taking into account commodity prices, the prices of inputs to make the goods to sell the consumer. Now, CPI is the inflation from CPI. That is the consumer's point of view. PPI is from the producer. So if you get a low PPI number, it's going to be bearish for the USD. What does that signal? It signals that maybe inflation's coming down and you don't need things like rate hikes or restrictive policy. Now, if it's high, if it comes in bullish, or if it comes in above expectations, it's bullish for the USD, and that means that you're going to see the USD rise against the majors. Things like risk assets and commodities more than likely are going to fall. So you definitely just want to have that basic idea of what the PPI is, and CPI is basically the same thing, except PPI, inflation from the producer's point of view, CPI is from the consumers. All right, let's see right here. Excuse me, very, very dry here today. Very cold, very dry. In any case, prices continue to rise. There's no question about it. Here's our numbers for today. The headliner for me was the 2.4% year-over-year jump in PPI. That's a big one. That's a big one. We went from 1.9% seasonally adjusted last month to 2.4. That was above expectations. On a monthly basis, we expected it to come in right at 0.2, and we hit that one right on the nose. So our expectations are not good. We expect inflation to keep moving higher, and that in itself is an absolutely just an absolutely huge expectation to have. It means that we're looking for a hawkish dollar. It means we believe inflation's entrenched. There's no question about it. Yeah, that's good to hear, Bobby. Yeah, the inflation's entrenched. I don't care what anybody says, and we'll talk more about this when the time comes, but just take a look at this. This is right from the horse's mouth, the U.S. Bureau of Labor Statistics. Producer prices in the United States increased to 145.62, reaching an all-time high of 145.62 in October of 2024. Now, that last line, the U.S. Bureau of Labor Statistics left that out yesterday on CPI. CPI was at an all-time high yesterday, but in the official release, in the official presser, they left that out. I always find things curious because I don't really believe in coincidences. I've heard of them. I just don't really believe in them. I'm sorry, but we just happened to leave that out of our CPI presser, but we put it in PPI. Oh, okay, all right. Listen, these folks know what they're doing. I mean, these are professionals. They're professional media people. They know. In any case, U.S. PPI, you can see prices continue to rise. Boy, I've been ringing the alarm bells for a long time, everybody. I mean, for a long time. But 2024, there is no denying that this is the year of inflation. Now, one thing about PPI is you'll notice that we sort of get into these periods where we've got like a 2-month plateau. Well, boom, boom, we feel pretty good there. And then you see the big jump. And then we go sideways, and then a big jump and go sideways. And now we're not really going sideways anymore. We're just gaining ground. I think we're headed for big trouble here on the inflation front. Last chart I'm going to show you here. What does this mean right here? Long term. Think long term. What is this? It means that life was pretty good back in here. Now, of course, coming out of the 2008 to 2015 period of time, we were in a deep recession. And so things like inflation weren't really killing us. They weren't. Interest rates were very low. But then right in here, you started to see the uptick, and you saw the growth with the U.S. equities markets really mirror that inflation. Then you saw the deflation of COVID, that deflationary period, because they shut the world down. But since then, This slope right here on this chart has to have everybody's attention. And no economists are talking about it. Nobody's talking about it. But the truth is, we have moved up very, very swiftly in about 2 years, and we're still grinding north. We're not coming back down. This inflation is what we call entrenched. It's baked into the cake. Forget about your growth rates. Everybody's happy today, about this stuff right here. Wholesale prices rose 0.2% in October, in line with expectations. Well, it's not really good enough. Okay, you're in line with expectations, but your expectations are already high. I mean, you saw the slope of that line. That's a big time jump, and now we're creeping sideways, and we're still going up. Guys, it all points to a hawkish dollar, and everybody wants to believe that we're coming down with interest rates in 2025. I don't believe that's going to happen. I think you're going to see some tariffs come into play, and then the U.S. Federal Reserve is going to pass the buck on to the Trump administration and say that the entrenched inflation is because of the tariffs. Don't fall for that. Don't fall for that. That's not what's happening. We are already entrenched. They cannot put the rabbit back in the hat. Prices are higher, and they're going to stay higher. The only way you could possibly eliminate it is cut your energy prices maybe way down by like 40%, and then you could see a little bit of price action come our way as far as consumer goods and services. But, I have to tell you right now, it looks to me like we're just headed for a catastrophe, and it's not political. It's nothing to do with anything. It just is what it is. We're still unwinding the COVID mess. That's all there's to it. In any case, and here's the deflation breakdown for October. You see what they're doing with headlines? Deflation, where there's no deflation. Well, prices came down here. There you go. Look at, they came down on turkey. They came down on snacks. They came down on bacon. They came down on ham. And then look at all this other stuff: fish and seafood, margarine, lettuce. Don't eat margarine. Margarine's made of plastic. That stuff will kill you. But energy, let's see. All energy. Energy's down a little bit. Of course it is. We're getting a little bit of crude oil selling right now. Gasoline's down. Gasoline is down. We're going into the fall months. All items, less food and energy. Okay, so if all of these numbers are coming down, why are we seeing deflation to some extent, said Stephen Brown, Deputy Chief, a North American economist. To some extent, then why the heck is PPI still growing? Keep a close eye on the media, everybody. They paint pictures. It's not true. That entire report's not true. There is no deflation. It's inflation. So I'll give it to you straight, and I'll speak frankly. There's going to be no BS on my streams. Only a couple of rules. If it makes money, it's the right answer. That's one big rule. If I don't know the answer, I'm not going to sit here and lie to you about it, and I'm also not going to BS you. The bottom line is this. We have a shift in the administration. The sitting administration is now gone, and right now, the Bureau of Labor Statistics, they're run by the government. They want it all to look like we were going into a deflationary cycle before the next administration steps in. That is categorically false. Believe it or not, some people are already campaigning for 2028, 2026, and 2028. We just finished an election. The government, I don't want to get too deep into it, but there's people out there right now that want to see those numbers go a certain way for the next election. And that's just the way that it is. That's politics. This is the gold trade. I sort of tweeted last night that we were in an absolute free fall. Our low went down to 25.36. Now I'm still looking at my chops right there from 24.85. I think that if you were going to write down a number for gold, this zone is going to be just absolutely imperative. It's going to be a big one. So when I get asked this a lot, Shane, you always say, okay, there's your key level, so that's your number. How come your entry point is maybe a little bit above this? And the answer is very, very simple. I want to make sure that I get in on the trade. Now, a lot of times if we sit around at, let's say, a key level of 38% or something like that, we're going to wait to buy it. We're going to wait to buy it, and we're never going to get it. I want to make sure that I get into this move because the last thing I want to do is see this thing go to like 24.85 or 82 or something like that and then just shoot back in the other direction by $100. I want to make sure that I get it, and the reason why is this market structure right here is vitally, vitally important to the bullish side of the market, meaning we are in an uptrend. If, in fact, we take out that 38%, then we're likely to see a big-time sell-off and a correction. I don't believe we're going much lower than 2,500. However, I won't say buy 2,500 because we've already traded that level a lot. Typically, the way markets work is they smash retail traders before the market continues its original direction. What's liable to happen here? Probably wash out everybody under 2,500 and then rebound and rally and go our way. That's what I'm betting on. I would much rather do that. So I'm looking at 85s. And if, in fact, we stall out and we see some signs of exhaustion right above 2,500, I have no problem going in there. But we're going to go in later. We're going to let this thing sort itself out. Right now, the stronger dollar is just driving gold way down, way down. All right, there's a couple of the pairs that I want to look at here. Great Britain pound, Great Britain pound Japanese yen is one of them. The guppy, sort of fascinating stuff. You can see our analysis has been up here for quite some time. And I wanted to leave this up because we actually put a market bid in on this a couple of months ago. Now everybody's sort of laughing at that, going, Shane, nobody can afford to hold for months. And I said, yeah, there are some people that can. It's not me and it's not you, but there's traders out there. There's the Jay Powells of the world and friends of Jay that can throw down on these trades and just let them roll. As a matter of fact, some of the richest people in the world take positions in the Forex market. George Soros is one of them. You guys have all heard the name. He's not very well liked in many circles and probably shouldn't be. But Soros and the Quantum Fund would be somebody that could have made a play like this. Now, I pointed this out back at the time, and I know it was 3 months ago, but that right there is that's just a hammer. It's not an inverted hammer, it's a hammer. Now, hammers are very important. Hammers are very important because they tell us a couple of things. Number one, they tell us that right here there was tremendous selling, a lot of sellers. And then number two, those sellers lost, and this thing got bid right back up. So a hammer typically is a reversal signal. I like hammers. I trade them on a 1 minute time frame off of my key levels, and I really look to scalp and tick scalp in that fashion. I love to see the hammers show up. When the hammers show up, it means that my support or resistance area is going to be correct. In this case, this was just a nice bullish break. You had really a big time uptrend here on the guppy. Spike low, spike high. Very simple analysis, not hard. Went right down there to 78%, tried to make a run at this swing low, and then got the big reversal, and then the next month you traded sideways. There it is. Doji, hammered Doji. We put a buy-in right down around there on that monthly open, 191.93. Now you're up at 97. Now I know that's not a practical trade for you guys to make on a monthly chart, but I want to show you that the big money in these markets, I don't care if you're trading crude oil, natural gas, gold, U.S. equities indices, the guppy. I don't care what you're trading. Those big money traders aren't diving into trades on 1 minute charts. They're not using 5 minute charts. I don't know if some of you were around when Nick was around here, when he was working as an analyst here. He worked at Lloyd's of London. We used to talk about how they traded. He goes, they didn't even look at charts. They just had order books with price in there, and when price got to their number, they bought a ton of it, and then they sat on it. This is what an investor would do. Now, is it easier to invest than trade? 1,000%. You'll find that the longer the time frames you view the market on, the more success and the easier it is to get on the right side of price. However, it's too damn expensive for most of us. To make a trade like this, you would need some serious staying power. You'd pretty much have to risk the bottom of that hammer, and who can really risk that many pips? 1,400 pips or something like that. You can't. Still, though, this gives us a good look at how to maybe trade it today. Pullback's over. We're grinding north. The yen's getting smashed. The Great Britain pound's looking pretty good against the majors. So right here, what could I do? A couple of things we could do. We could get, number one, we could get a big monthly number, a retracement value, something like this. Look for a pullback to 192.30. We could easily do that. Still, though, we're 500 pips away. So believe it or not, let's go down to a daily chart, see what our dailies say. Dailies are sort of tough. Why are they tough? Because we're flatlining. We're flatlining right here. But we do have a moving average right there on the daily, a 13-period EMA. That's my favorite. 13-period EMA right there. We're sort of grinding north. Do we want to buy from here? It's chaos on the 4-hour chart. Just look at this, just sort of a picket fence. I would consider making this play right here. Last 8 hours. Tough market structure. I'd be looking down in there to maybe a 197.50, something like that. 197.50, and let's dial it back down to our daily. And what do we have? Down in here, where's our moving average? 197.50. We call that convergence. I've got a daily 13-period EMA, and that lines up with my 4-hour 62% level. I like it. Is that an aggressive trade? Not really. It's passive. It's only about 30 pips away. Somewhere in that 52 area, you could bid the guppy and be just fine today. More than likely. The hardest part's going to be getting the price. That's for sure. Let me see. T Marina price has been hammered down. Yeah, that hammer was pretty good. I like that. Those hammer formations are really solid. So that's an illustration of how you can look at, say, something like a monthly and sort of reverse engineer that thing down to an affordable trade for you. Once at 197.50, somewhere in there, I would go 53s probably. Shade that maybe a full pip. Where would my stop loss be? It's a pretty good 50-pip trade if you want it. Somewhere down in there. Maybe right beneath 197. So dial your leverage down 1 to 3% on any given trade. If you want to be aggressive, I'll give you 3. I'm thinking of moving it to 3 to 5 because we got to make some money at some point. But we can stick for 1 to 3 right now. But a 3% trade, you're betting 50 pips there. 197.53 is your entry. You're out somewhere beneath 197, maybe 60 pips. Make sure that your per pip value doesn't blow out the bank, and you want to make sure that you can let that trade play out. The reason why you're going to need probably a little bit of room on this trade is because the market's relatively flat right now, and in flat markets, it just rotates. Remember that. Goes up, goes down, goes up, goes down, goes up, goes down, and that's probably the problem. Let me see. What's Powell chatting today? Hey, Cisco Care Bear. Thanks for reminding me. Jay Powell's going to be speaking. Let's see, Fed Chair Jay Powell's speech is at the Dallas Regional Chamber at 3 p.m. Eastern time, so about 1 o'clock, about an hour, 1 o'clock my time, so about an hour and a half from now, about 90 minutes from now, you're going to have Jay Powell. Now, anytime they say that the talk could offer further insight into future policy, I would be shocked if Jay Powell says anything about future policy right now, especially with just how hot the U.S. dollar's been. Something like this, I mean, no question about it. There's your 4-hour DXY chart, and what do you have? Sort of a trend. Pulled back, failed at 50%. I don't trade 50%, but still going up. But from a macro perspective, just to sort of clue in everybody on what Powell's going to say, or why addressing the market right now is important, because the U.S. dollar is absolutely rocking and rolling. Those are yearly highs. We're trading above those previous yearly highs. We've made new yearly highs in the last several hours. And then take a look at what you have right there. You always be a student of the game, meaning always understand what happened in the past may not happen in the future, but markets have memories. So when we look at something like this, we'd say, okay, those are 2024's highs. That's 2023's highs right there. Right there, 2022, that would be 2022's highs. So 2023 right there, that'd be your next sort of port of call, 107.34. We tested that on the DXY. Now we're just sort of rotating back down around this year's highs. We want to buy it. There's no question about it. The dollar is definitely strong. So if we do look at what Jay Powell is supposed to say, the talk could offer further insight into policy. Probably not. Probably not. I would be surprised if Jay says anything, just because the U.S. dollar is becoming incredibly strong, historically strong once again. I would be shocked if he said anything about policy. But I think that what's going to be the topic of the day is this. It's going to be politics. I ran a quick Google search before I jumped online here. A couple of things always jump off at me when I run a Google search. I went Jay Powell news. That was it. Take a look at this. Take a look at all the news stories right now within the last several days, and very, very recent. The real reason Trump won't try to fire Powell, there's only one way Trump can fix Powell's opposition. Jay Powell was prepared to fight for his job. Can Trump fire Jay Powell? Trump is stuck with the Fed's Jay Powell. What does that mean? It means there's going to be a real move within the United States government to get rid of Jay Powell. There's no question about it. All of these stories right here suggest that Trump is not going to want Powell around, and Powell wants to be there. Now, that immediately sort of suggests that there's going to be some strife here with the U.S. dollar. We're seeing the dollar really rally. Now, why would that happen? Why would the dollar be up against everything pretty much right now? I mean, stocks are sort of in a holding pattern right now. We'll look at a few equities before we sign off, but my big question is this. If the dollar's up and stocks are up and commodities are sort of down, what does that mean about interest rates? It means that we're probably not going to hike them. It means we're probably not going to cut them either. It means they're going to stay the same right where they're at. So when we're looking at something like the CME Fed Watch 34 days, I'll have FOMC live for you. But take a good look at our expectations. Probabilities for the 18th December meeting, 75% to 25%. This could change. PPI came in hot today. CPI wasn't good either. That all suggests that inflation's becoming entrenched. Does Jay Powell take the gloves off and start hiking interest rates? I think it's a real possibility. I think it's a real possibility for 2025. I really do. No one else is saying that. I'll go out on a limb. It really doesn't bother me any. So into Q1, 19th of March, somewhere in there. Remember, we're right here. We're at 4.5. We're right here. So we're pretty sure we're going to get one more cut, maybe two. And then I always love looking way far ahead, about as far ahead as I can, just to see what the odds are doing for the 10th of December. So that's about a year from now. Where do we expect interest rates to be? Now, remember at that September meeting, they were promising interest rates were going to be down by about a full point from where they're at. So basically, they were saying we're going to be down here at 3.25, somewhere in here, maybe 3.5. That doesn't look like it's going to happen now. Matter of fact, we're looking at maybe 4%, somewhere in there. Odds on favorites between 375 and 4. That means that those rate cuts that we thought were going to be there aren't necessarily going to be there. So that, to me, is an absolutely huge deal. Shifting expectations, I think that could bring about just a major pullback in risk assets, and also send the dollar to heights we haven't seen since maybe that aftermath of COVID in 2022. Let me see. Let me see. A single bear. Will Powell make the NQ go up or down? He's going to make it go down. But that's advanced though. We got it. The Nasdaq sort of got a mind of its own right now. Powell resignation. I don't think he's going to resign, but I think there's going to be incredible pressure for his removal. And anytime anybody says that you can't do something, you can do it. So where there's a will, there's a way. My guess is there's ways that they're going to put pressure on Powell to either toe the line with the rate cuts or resign. Do you think Powell will cause gold to dip? Yeah, I mean, right now, Dio, absolutely. I mean, we're seeing the strengthening dollar. This is a good look at the dollar-yen chart. If, in fact, you were interested in placing a dollar-yen trade, something like this is going to be pretty easy. This is pretty easy. We bought in as soon as we broke above that, out of that golden zone, that Fibonacci golden zone. We bought in and went long, and now you're looking to go short from right around 157.12. That's easy. Be short right on this side of 157. That's a pretty good scalp price for 35 or 50 pips. But as far as what would it do to gold, this hawkish policy is going to send gold lower. No question about it. So right now we're still very much in bullish territory, but if we start missing rate cuts, and we start maybe talking about inflation being hot and rate hikes, immediately I'm looking at the back end of my golden zone, and that thing could come into play down there right around 2,300. That could come into play relatively quickly if it looks like we're not going to cut and we're going to hike. So to answer your question, Dio, yeah, he could definitely cause gold to dip. I think gold is changed. I'm still bullish, and I still want that bid from 85, but as far as, am I long? Do I still believe 3,000 is going to come into play? It certainly could. It certainly could, but I'm not as sure that 3,000 is coming into play as I was before the election. We were relatively assured that it was going to hit 3,000 if Harris won. This is not the case, though. Things are different now. Things are different. Okay, NASDAQ, good question here. Let's go to the US 100 CFD and sort of dial up a few levels here. Well, we got some old analysis there, but essentially, what do you have here? You got just an absolutely huge month. Why do you think the NASDAQ would have headed higher after the election? A lot of optimism, a lot of crypto optimism, and that's one thing. But the big thing that I would say about the NASDAQ and the NQ, and we can just go right to the NQ futures if you want. That's what, I've done some trading on this one before. The biggest thing facing technology stocks right now and tech is energy, power. We all know that the AI technology is there. I know that the AI boom is going to be a big, big deal. But what we don't know is how the hell we're going to power it. We've got a couple problems. You don't have enough copper. We got a big copper shortage on the horizon. I wrote a piece on copper last month, really showed that, we're going to be bullish copper for quite some time. You don't have the conductors necessary for these huge data centers. You don't have the power. So AI, as great as it is and as revolutionary as everybody believes it's going to be, and I'm sort of in that camp. I don't even know what it is. It's another consciousness or another life form. I've heard that said. I think that could be the case. But when you start talking about how are you going to power it, the transition into nuclear is interesting. Amazon, Google, some of these big tech companies are talking about building small nuclear reactors to power their data centers. Now, you have a much greater chance of getting some energy projects like that passed under a Trump administration as opposed to a Harris or a Biden. There's no way that the Democrats were going to approve that stuff on environmental grounds. They weren't going to do it. And maybe they were right. Nuclear energy, incredibly powerful, has a checkered past. Under the Trump administration, I would be shocked if those things aren't fast-tracked. So as soon as you get the energy and the conductors, then it's just guns up. I mean, big tech is going to go as high as it can. AI probably will be the new rule in every facet of our life. So if you're looking to trade this NASDAQ, can Jay Powell do anything to really stymie this? Yeah, you can hike rates and you can make money tougher to come by and maybe control some of the exponential growth happening here. Typically, that's the way it works with stocks. But can you hold this thing down for long? I think AI is the deal breaker. The one that I think is going to pull back is probably going to be the S&P 500, if I had to guess. Spike low, spike high to a spike low. Boom, boom. There's your bid, and that's a dandy right there. I got my 13-day EMA down there, right around 20,830. We've also got, the 38% retracement right there. This is going to be a pretty good trade. Now, if we're fortunate enough to get it, If you get it later today, take it. But if you get that level maybe tomorrow, that could be a good one as well. All right, we got a couple other comments here. Let's see. Mark Corp. German government has collapsed. Election in February. German economy sinking. Election in February. Germany is the engine of the euro economy. How low can the euro sink? It's a good question, Mark. I think that the euro is in a position to get really bad, and that's exactly you nailed it. You hit it right on the head. I mean, Germany's in really bad shape. We don't know how that's going to work under a Trump administration. Trump's been very clear about the tariffs. Some of those tariffs are going to be pointed at the EU. So in one respect, the German economy is in trouble more than likely. You could trace that back to the energy problems coming out of Russia. But where do we go from here? Where does Germany go from here? Where does the euro go from here? This is a major 2-month correction. Anytime I see a market that's breaking out and getting crazy, I just pull up my long-term charts. My long-term charts, they almost always give you an anchor point. Take a look at what you have right here. This little 3-month combo. What is that? That's a morning star. Big time sell-off, doji, big gap up. That was a morning star. Theoretically, a reversal signal. Be very careful down there. That low is right around 104.48. That's a bid for me. No question about it. On a scalp, 104.55. Look to grab that 50 pips. If we don't get a bounce, if you don't see the Euro USD get a bounce right there, there's major problems to the downside. And there's already major problems, but major problems. There's your retracement right there. From September of 2022 to July of 2023. Still, that's a relatively tight range. Think about that. That's about under a year. And we've been trading inside of that for the last, 18 months or so. You've broken beneath the sort of 38% of that range. I would be looking to do a little business from that spike. If not, we could you could go to par value. You could go to par value. I mean, there's no rules on how low these things can go. All right, let me see right here. AI, pattern recognition machine like the human brain, but capable of assessing and applying many concepts simultaneously. Yeah, it's just the creativity. Once AI starts thinking for itself, you definitely would have to look at that. T Marina, Microsoft and Bill Gates purchased a tower at 3 Mile Island and waiting on approval. There was a lot of talk about these nuclear reactors, and it's going to be one of the biggest. It's going to be one of the biggest stories in the next year. I guarantee you that. Let me see. Placing entire house on NQ cells as per your advice. I didn't tell you to sell it. No way. No, sir. No way. All right, everybody. I'm going to go ahead and sign off for a while. Remember, these are trade ideas. This isn't advice. Don't ever say that I'm giving financial advice to anybody, because I'm not. Remember to have your stops down and your leverage in check. Understand that one of these trades gets away from you. If you bought the euro, you're getting crushed, you're getting absolutely throttled. And if not, maybe if you bought gold, you're getting hurt too. So there's always that chance of buying tops. There's always that chance of selling bottoms. That's where stop losses come in. Stop losses are very important. Make sure that you cut these losers off. All right, everybody, I'm going to go ahead and sign off for today. Connor's going to be back with you tomorrow. He's going to recap some live trades and new opportunities, and then we're going to talk a little bit. We're going to be on early tomorrow. We're going to scalp some retail sales, U.S. retail sales numbers. I'll go over the numbers real quick, and we'll probably throw in maybe a 9 EMA strategy, maybe look at some 1-minute charts, and then we'll also look at that triple crossover strategy. We've also got a new video dropping tomorrow that I really like. It's called the Rally-Based Rally Strategy. So if you want strategies, go on over to How to Trade's YouTube channel and go ahead and find one out. Shane's the Brain Trust. I don't know. Just joking. Yeah, I know, Cisco. We're all good. All right, everybody. I'm going to sign off here for a while. You guys have a fantastic day. Trade the action well, and we'll talk soon. See you.